You've made it to part 2 of the annual finance report. You may be watching this straight through, or you may be just joining this video because you want to know how to correctly report your expenses. So here we are in section A of page 6, expenses and other financing uses. Now, we're going to double check before you go any further that the X on the top of the page is in the correct place. Again, new this year, your form will automatically have the non-GAAP or cash basis box checked. And if you are a GAAP city, you need to change that so that that is not incorrect. So let's look at all the ways that a city spends money. You have a big block where you'll be reporting all of Section A. Section A is public safety, and it's a big block with a lot of detail. It's going to be your police, jail, emergency, flood, fire, ambulance, building inspections, other protective services, animal control, and other public safety. There's a lot of different lines in here for you to break out and report your operations, purchase of land or equipment, and construction. Most of these will be reported in the general column, which is column A. You may also have some expenses spent out of special revenues, especially for the emergency services. Again, all of the expenses that you report in columns A through F are going to be automatically summed by the workbook and put in column G. Nothing in public safety would be appropriate to report in the proprietary column, so it is shaded with polka dots so that you cannot accidentally report an expense there. Same with the TIF column, column C. Just as on the revenue pages, you will notice that the bottom of the category is totaled for you, so that on line 40, you have a total for public safety. Moving on to page 7, you see an entire category for public works. Public works has a lot of detail, just like public safety did. You will have expenses to report in, most likely, the special revenue column, as you will be using road use tax in your public works for anything related to streets. Just like public safety and the previous work pages, you're going to have a total at the bottom that will sum for you as you go through and put in your expenses. The whole report is only 13 pages, so you are now over halfway. Section C talks about health and social services. For many cities, the only thing that may be reported on this page might be mosquito control on line 91. Be careful when you read line 91 where it says water, air, and mosquito control. It does not mean water like your water utility. It is not for the proprietary fund. It is something that would be purchased out of general fund to take care of water, air, or mosquito control. You may also have expenditures, health or social services, mental health, city hospital, or welfare assistance. Like all of the other pages, line 103 will show a total for all of your expenses in the health and social services category. That line will transfer to page 1 on your summary page and show all of your expenditures for this category. Moving on to page 9, sections D and E, culture and recreation, and community and economic development. Section D covers all of culture and recreation as defined by the state. It has library services, museum, parks, recreation, cemetery. Yes, cemetery is under culture and recreation, and community center. The expenses for the culture and recreation section, section D, typically come from the general fund or special revenues. You may also have a capital project in your culture and recreation category, as you may be doing some kind of park expansion or something with your swimming pool or library. The total of all expenses for section D is shown on line 139. Now let's take a look at section E, community and economic development. Just like the other pages, all of the entries on this page are going to sum at the bottom, but we're going to look at section E separately. Section E is Community and Economic Development. It is a special category because it is the only one that is likely to have a box filled in for TIF special revenue expense. So if your community is participating in a beautification project or doing something with housing, purchasing and developing land, working with a developer who's purchasing or developing land and doing some economic development pursuits, this is where all of those are going to be reported. Again, it is extremely important and the TIF expenses be reported in that column. Now let's look at page 10, section F, General Government. Under General Government, you will have the expenses for the mayor and city council, your city clerk, treasurer, finance officer, any elections that your city may hold during the year. You may also have legal services for your attorney listed under General Government, as well as your expenses for your city hall and general government buildings. There's also a line for tort liability. Cities often handle tort liability in one of two ways. Either they list it all in one place under General Government, or they split it out into each category so that it is reflected in each department's budget. There's also a section for General Government Current Operation that's kind of a catch-all for the other things that cities do. Moving on to section G, Debt Service. It's pretty obvious that you may record debt service in column D, Debt Service. So again, that's principal and interest and maybe some registrar fees for your general obligation bonds. There's a completely separate area for any of your revenue bonds that are going to be paid by the proprietary funds, and we'll get to those in a little bit. This is just for your GO bonds. You could also have some small loans from the bank that may be paid for out of the general fund, and of course those would be reflected in column A. So you need to appropriately report where each expense was paid for debt service. And the same is true for section H, which is regular capital projects. We definitely want to make a distinction between what we're calling regular capital projects and what are tax increment financing projects. As you see in the sample on the screen, we have some of each, and they're both being reflected in the capital project column. So your TIF funds are coming in and being transferred to the capital project funds so that they can all be reflected with that project. Many times your large economic development projects are so big that you have multiple funding sources. You may have something from the Economic Development Agency, you may have some from USDA, you might have some coming in through TIF. So putting them all in one spot under the column of capital projects is a great way to keep track of all of those things so that you can see all of that project in one place. The government activity expenses are totaled on line 194. And again, line 194 is going to report back to your summary page. So we finished expenses. What's left? We're at the bottom of page 10. I'm going to remind you, save your work before we move on. So what's left? What's left is section I, page 11, which are the expenses for your proprietary funds. We have been skipping those all along, and now they are the only columns that are available to be filled in. All of page 11 is designated just to the proprietary fund expenses. Each category, water, sewer, gas, electric, and so on, have details that can be filled out for operation, purchase of land or equipment, and construction. This city, for example, had expenses for their water department and also for their stormwater department. Fill out all of your expenses under the appropriate business category. Please notice that there is a section for other business type current operation in case you have a utility that is not listed. And down toward the bottom of the column, you have an area for enterprise debt, capital projects, and TIF projects. So it's possible that a business wants to expand in your community and you've agreed to pay for that with tax increment financing funds. But it really belongs in the proprietary category because what you're building for them is a sewer and a water connection so that they can relocate their business in a new location. So if that's the way the project is going and you have committed tax increment financing funds to their capital projects and what you're really building is a utility, then you want to make sure that it's accurately reflected in column H under the enterprise TIF capital projects. And just another reminder, internal services go in column H unless budgeted as a special revenue fund. You want to make sure that you're consistent as you put those in across this report. So there will be a total on line 251 for total business type activities. The total governmental expenditures are going to be found on line 194. They're going to be added to the total business type activities, which is line 251. And that's going to give you the total expenditures for FY17, which are going to be reported on line 253. Now, quick question for you. Did your total expenditures match the total on the budget reports that you've been giving to your council? There are certainly times where mistakes are made and changes are made across the course of a fiscal year that have changed the balance of some funds. Now the question is, which report is correct? You'll need to decide which report is right, and if the annual finance report is right and the previous budget reports that you had given to the council were incorrect or something had changed, there's nothing wrong with giving the council an amended report, especially if it's something major, like you put a regular capital project in general fund or accidentally filed it in a TIF category before. You want to correct that so that everybody moves forward from the same point. It happens. Just get it corrected so that the council can be on the same page with you. Finally, on page 12, let's look at section J, other financing uses including transfers out. There are lines for regular transfers out and internal TIF loans, repayments, and transfers out. Be sure to separate your TIF transfers out from your regular transfers out. Report your regular transfers out in the appropriate column. There may be a transfer out from general fund. If you have local option sales tax, you should have a transfer out of your special revenues column. This is where you're moving your local option sales tax to a different fund to be spent. If you have TIF revenues, you are likely transferring those out to either debt service or capital projects. Line 253 will be the total of all of your expenditures that you entered before. Your worksheet will automatically add that to the total from section J of your transfers to give you total expenditures and other financing uses on line 259. Line 259 will transfer to the summary page, page 1. We are not quite finished with part 2, but we are finished with this section. It would be a good time to save your work. That brings us to the bottom of page 12 and the end of part 2. There's one section to go, and it looks scary. It's got a lot of error messages on it, but don't worry, that's only because we haven't put in numbers yet that it's looking for. We'll address that in a minute, but before we get there, let's look at something else first. Does the total ending fund balance as of June 30th, 2017 equal the sum of all bank accounts and investments for all of your budgeted funds? Look at them in each fund category. Is your general fund ending balance the same as this? And your special revenue fund the same as this? If they're not, this is the time where you need to go back and make corrections. You only need to look at the columns that are not the same as the ending fund balance that you have for your general ledger. Make those corrections now before moving on. If your ending fund balance is the same as your general ledger, great! It's time to move on to the next step. Now let's get rid of those error messages. Those error messages show up because of GASB 54. GASB stands for the Governmental Accounting and Standards Board. Order number 54 requires that the ending fund balances be classified into one of 5 categories as shown below. They include non-spendable, restricted, committed, assigned, and unassigned. Let's go through each one of those and see what they mean. We'll start with non-spendable. The most common one of those is going to be your perpetual care funds for your cemetery. As a reminder, those perpetual funds cannot be spent. That's why they're listed as permanent non-spendable. The only thing that can be spent from those funds is the interest. Other things that may be included in the non-spendable category may be gifts that were given with the condition that the principal may not be spent, or if you're a city on GAAP accounting, this would include your inventories and prepaids. Restricted are funds that are governed by an outside party, such as a creditor, grantor, or a constitutional provision. In Iowa, this includes road use tax and local option sales tax. Road use can only be used for roads and road-related purposes, and your local option sales tax uses were dictated by the ballot that adopted it. Committed funds. Committed funds have been obligated by the City Council through a formal action, and the key here is a formal action, meaning a resolution or an ordinance, prior to the end of the fiscal year. So it had to be done and completed before June 30th, 2017. Future actions must be made in the same manner to remove this commitment. So if your city council has decided that they are going to enter into an agreement that is going to be maybe a long-term lease that they approve through resolution, this was where those committed funds would be reported. Let's move on to the assigned category. Assigned funds are those that the council has designated to be committed after June 30th, 2017, or the council has delegated the authority to assign funds to a committee or an individual. This may be where the city council has said, if there's a fund balance remaining at the end of the year in a certain category, it needs to be put toward a future expense. And they give the city clerk the direction to earmark those funds for future use. Now we come to the unassigned category. This covers all funds that are not non-spendable, restricted, committed, or assigned. You will likely have the biggest ending cash balance in this designation. To eliminate your errors, the sum of all governmental funds must equal total ending fund balance. Non-spendable plus restricted plus committed plus assigned plus unassigned need to equal the total ending fund balance. This will also be equal to line 270 for columns A through F. Now you may notice as you look at your numbers that you have a column that is off by one digit, too high or too low. This is because we are only reporting in whole numbers and you may have a rounding error. Look at the original numbers that go into creating that number and decide whether you need to adjust up or down. All proprietary or enterprise business-like funds are included on line 269 in column H. Line 271 should be equal to line 136 on page 5. If it is not, it will show up as an error on the error page. Here we are at the bottom of page 12. Remember to save your work.